Hi, good afternoon. This is a Bombay High Court judgment. Citation is Commissioner of Income Tax TDS versus Vodafone Cellular Limited. Issue is how to compute the limitation period for, for passing orders uh, for TDS returns. That is treating the assessee as assessee in default. What is the limitation period? So facts is very important. So the TDS return for the first quarter, that is for 1 4 2008 to 36 2008, was filed on 19 7 2008. Second, TDS return for second quarter, that is 1 7 2008 to 39 2008, was filed on 15 9 2008. I think there may be an error because the period itself is over by 39. How can the assessee file the return on 59 itself? Because maybe there is an error in the judgment. It could be 1510. I am not sure. But it says 1 7 2008 to 39 2008. That is the second quarter filed on 15/9. So there is a doubt for me. The third quarter, 1 10 2008 to 31 12 2008, was filed on 15 1 2009. Then the fourth quarter, 1 1 2009 to 31 3 2009, was filed on 15 6 2009. Now, the first three quarters, if you take, they fall under financial year 2008 9. Whereas the fourth one, the TDS return, falls under financial year 2009 10. Now, the assessing officer passed an order under section 2011 declaring Vodafone Cellular Limited, that is VCL, as assessee at default. This order was passed on 15 3 2012. Now, if you see section 2013, what it says is simply put, no order can be made after the expiry of 2 years from the end of the financial year in which the statement is filed. I repeat, no order can be made after the expiry of 2 years from the end of the financial year in which the statement is filed. So, if you see, the first three quarters fall under 2008 9, the fourth quarter falls under 2009 10. The contention of VLC was, as far as the first three quarters are concerned, it falls under financial year 2008 9. The order was passed on 15 3 2012. Hence, the order is time barred. Department did not accept that contention. Department said the entire year should be taken as a whole year. It should be computed on annual basis. And in that basis, if you take, the last quarter falls under 2009 10. Order is passed on 15 3 2012. Hence, it is within limitation. This is the contention of the department. So, tribunal accepted the contention of BLC and held that the order, as far as the first three quarters are concerned, it is time barred. This was challenged by the department before the High Court by way of an appeal. Bombay High Court held that the commencement of limitation is linked to the filing of the TDS return. Since the statements are mandatorily required to be filed on a quarterly basis, the computation of limitation must necessarily operate quarter-wise. Bombay High Court did not accept the contention of department that limitation should be computed on annual basis. Bombay High Court said the language of the statute does not prescribe of cumulative or annual computation of limitation. The scheme of TDS compliance under the Act and the rules treats each quarter as a separate compliance period with distinct due dates and independent statements. Each filing consequently furnishes a separate starting point for limitation. The department's contention that limitation must be computed on annual basis is contrary to both the text and structure of the statutory framework. The Bombay High Court said this. Bombay High Court said that an assessee, this is very important, that an assessee cannot be prejudiced by the assessing officer's failure to pass the orders within the prescribed period. It is well settled that limitation provisions in taxing statutes must be strictly construed and cannot be extended by implication. This is very, very important. Bombay High Court upheld the order of the tribunal. So that is a judgment. Thank you very much. Have a great and wonderful day. Bye.